So I trust everyone enjoyed their lunch. I'm not sure why we're doing auditors right after lunch. I think that's a little strange. For those of you who don't know me, I'm Deborah McKinstry. I'm the CAO and clerk for the Township of Edwardsburg Cardinal. When we were designing the orientation program today, I suggested that the municipal auditors from the township should be invited to make this presentation because they've been there with us for so long. I've been with the township for 25 years. Yesterday, I went to look to see how long ago we appointed these auditors. It was actually initially in 1974. They've morphed through different partnerships to become the firm that they are today, MNP. The two gentlemen that are actually going to do the presentations today, Jamie Pollock and Ian, are actually weren't even born when those auditors were appointed. So that should tell you something. Ian Murphy is the gentleman that actually does our own audit. We see him several days out of the year. We trip over him and, generally try and give him all the answers he needs. He's not too intrusive, which is good. Works out of the Cornwall office, and he has more than 10 years of experience. Their bios are in your agenda package, so I'm not going to go through them in detail. Jamie Pollock has 20 years of experience in auditing, and I'm sure they're going to give you all the information that you need to know in order to fulfill your responsibilities in the finance world. So please welcome Jamie and Ian.
Thank you, Deborah. I'm not sure we're going to give you all the information that you're going to need to know, but we're going to hopefully give you some of the information that'll get you started on your way anyways. So for our presentation, we're going to go through 4 different main topics: understanding financial statements and budgeting, the difference in between the two, and what you need to focus on when you see these types of documents, as well as other financial information and documents that you as counselors may want to focus on, given some key items that you should be aware of and to read through to make sure they're all developed and linked properly. We've got some new accounting standards, so accountants get excited about new accounting standards all the time. So just a brief highlight of what might be coming down the pipeline that way, and then outline responsibilities as auditors as compared to administration and council, and where the responsibilities lie for the financial statements and the information thereon. So I'm going to start with understanding budgets. You've got 2 different types of budgets. You have an operating budget and a capital budget. So your operating budget basically gives you a detailed estimate of providing the costs of programs and services to the township or municipality. The tax rates are set based on net expenditures. So while developing your budget, you go through and you develop the list of expenditures that's going to be incurred over the next year, and your net taxation rate is then based on that. So it's a derivative of all of your expenditures that way. One key note is that while budgeting, you can't budget for a deficit. So your tax rate is really whatever the net expenditures are, and that you need to raise that type of taxation revenue. So you're not allowed to budget for a deficit in a given year. Your departments are set up based on financial reporting that's required for the ministry. So there's various departments in your budget: general government, protection to persons and property, and so on. So this kind of breaks down the type of expenditures for the townships as you go through, and it's made up of sub-departments as well. So it just keeps getting more and more detailed as you go through. So something like the environment department has various sub-departments where it takes into account your sewer services, your water services, waste management, so garbage collection, that type of thing, waste diversion with recycling and all that kind of stuff. So everything gets detailed and broken down by departments and by sub-departments so that it can all be reported ultimately up to the province, and they can take all that information and do their analysis as well. So your type of expenses that you would normally incur are also broken down. So you have your typical wages, debt charges, which is your payments on any borrowing that you've done. Materials, which captures quite a bit of cost. So it's materials, office supplies, could be utilities, it could be any type of stuff like that. Contracted services, so if you hire third-party services to perform services for the municipality, that gets grouped in there. And you have transfers to reserves, so if you're building up your reserves, those show up as an expenditure on your budget as well as capital expenses. So if you're doing any capital projects, that shows up there, and it gets linked with your capital budget as well. So your capital budget, this is, you set aside amounts, so this doesn't necessarily, if you're familiar with regular businesses and capital expenditures, this isn't necessarily just the capital expenditures. It could be anything in relation to capital, as well as repairs, maintenance, ongoing maintenance for your infrastructure and buildings and that kind of stuff, as well as purchasing or replacing assets as well. So it encompasses quite a bit of areas, but you usually have a capital budget and an annual capital budget, and you should also have a short and long-term capital budget as well. So you have an idea going forward in the next 1 to 2 years, next 5 to 10 years, what your capital needs are, and kind of spread out those costs over the budgeting process so they're not all incurred at the same time as well. So once you go through all of the expenditures and find out how much it actually costs to run the township, then you've got to come up with the revenue to offset all these costs. So there's various sources of revenue, and you don't have a lot of control over a lot of them. Most of them are set, and they're decreasing as well with the grants that are available and stuff like that. So taxation is the top line there. That's the net that you need to raise. So whatever you determine as your capital budget and your operating budget, whatever balance is your taxation revenue for the year. You set user fees, service charges on various programs and operations that you have. So those kind of carry forward from year to year, and those are fairly constant. So those are relatively easier to budget for, and they're kind of projected out on the last over the next several years as well. Water and sewer fees, these are generated based on the budget for that department. So that's a separate budgeting process where you budget for the water and sewer operations. That doesn't come out of the normal township budgeting. So when you think back to the different departments that were set aside, that's where those costs get allocated to these revenues as well. So those water sewer rates are dependent on the capital and the operating budget for the water and sewer area as well. Yeah, so you may have some rental income if you do have some buildings that or land that's rented out to third parties, and then you can pull in money from your reserves or reserve funds, which show up as revenue as well. So, and then the last piece that show up as a revenue on your budget is long-term debt. So if you do have some borrowings during the year, the money coming in as a loan is shown as a revenue on your operating or capital budget as well. So then we go to the financial statements. So the financial statements is where the auditors come in. We come in and provide an opinion on these financial statements. Management drafts the financial statements, and it's basically a report saying, here's where we budgeted, here's where we ended up, and the results for the year. So there's a few statements in the financial statements that we focus on as auditors, and when we do the presentation to council, where we highlight various items as well. So these statements aren't like normal financial statements for a business. So if you're a business owner, you're used to your financial statements. These won't look like those or anything close to those as well. So the municipalities follow public sector accounting standards, which has its own set of rules and guidelines that state how we have to report all of these numbers. So the first statement is a statement of financial position. So that's called statement of financial position instead of the balance sheet. So this is basically your balance sheet. It shows your assets, liabilities on a given date. So in most cases, December 31st is where you'll find this, what you'll see there, and it shows all the balances on that date, your cash balances, balances in receivables, payables, and it brings you down to your net financial assets, or you may have net financial liabilities as well. So it depends on how much debt that the township has. We're seeing more and more net financial debt or liabilities as opposed to net financial assets as the grants decrease and the municipalities have to borrow more money. So having a net financial liability is not a bad thing. So don't be scared off when you see that term. It just means that overall, the township may have more liabilities than assets, but the long-term debt is included in that. So it's not the current portion of that long-term debt, which may be paid out over the next year. It may be paid out over 20 years. So it's not something that is always concerning. The last line on that statement shows the accumulated surplus. So we just caution you that this isn't the township's actual surplus that's been accumulated over the last number of years. So we've done a sample numbers here, and typically you do see accumulated surplus in the millions and millions of dollars. In this case, it's 46 million. So what that basically represents is all your infrastructure assets as well. So it includes all your tangible capital assets, your vehicles, the cost of your buildings, the cost of your roads, and everything like that. So that's all built up in that number. Just to give you an idea of the total assets that are under control of the township, and what you're actually managing as the council. Then we go to the statement of financial activity. So this is commonly the income statement. So it shows the results for the year. So it's broken down by those same departments as well. So you'll normally see general government costs, protection to persons and property, and so on and so on. So, and then at the end of the day, you'll see either a large surplus or a large deficit on these financial statements, which has nothing to do with your operating and capital budget that you set aside at the beginning of the year. So, again, these are presented in PSAB format, which you don't actually budget on. You budget on a cash basis. What you need as cash payments, you budget for. What you bring in as cash revenue is what you budget for as well. So these statements don't reflect a lot of those transactions. So it's, I know, we try our best to try to explain it to people and say, okay, well, do it this way. Well, we're going to report it on this method, and we try to link the two at the end of the day. So it does eventually link all the way through, but there's a few steps on the way there. So your standard financial statements won't actually show you where you are. So the statement of cash flows, this basically shows what the change in your cash balance. So if you look at the statements, you'll say, okay, well, I ended up with $2 million in cash. Last year I only had $1 million. How did I get that increase in $1 million? This kind of outlines where all that cash came from or went. So it'll show that you collected receivables, paid off some loans, maybe you've invested in some infrastructure, you bought some assets, stuff like that. So at the end of the day, it'll show at the bottom your increase in your actual cash balance. So in this example, just over $1 million increase in your actual cash balance. Not a surplus again, but it's just saying, okay, you've collected more receivables this year, you may have paid less payables, so your cash in the bank actually went up by a certain amount. And those are the main statements which are made up in the financial statements. There's a whole bunch of supporting schedules, whole bunch of notes, and your financial statements may be 20 or 30 pages long. Those are the main 2 to 3 pages to focus on. And then there's some schedules that are normally included and notes that are normally included as well. which will help you identify what those numbers mean and how they link back to your actual operations. So one of these schedules is the schedule of accumulated surplus. What this does is it breaks down that $46 million that you saw on your statement of financial position. So it says what that surplus is made up of. In this case, most of it's your equity and tangible capital assets. So that's your infrastructure, your road costs, your buildings, your vehicles, and that stuff. It also outlines what your surplus, your accumulated operating surplus, your water and sewer surplus maybe, or a deficit if you have one. Landfill costs, so those are projected landfill closure costs over the next 20 years. Those are shown in that number as well as the balance in your reserves or reserve funds. So if you have money set aside for reserves, that's made up in that number as well. So it breaks down normally what's included in that number, and then in the reserves where those reserves have been allocated to, whether it's working capital, whether it's fire, water, roads, or whatever you may have them set aside for. The schedule of tangible capital assets. So this is one of the PSAB adjustments that changed a number of years now, and the townships are required to track capital assets, what's purchased, what's sold, and how long those assets are going to last. So this is a good schedule that we like to highlight, and we think you should focus on as well. It gives you an idea of how much you should be spending on your assets. This is a fairly high level and just one of the tools that help determine that, but it gives you an idea how quickly your assets are depreciating or losing their value. So if you look at, it's broken down by different types. You'll have buildings, equipment, roads, water, sewer, that kind of assets. Some of them, obviously a building, we write off a building over a number of years, usually 40 years. A building may last for 100 years, so that might not be the best scenario. But if you look at something like equipment's going to be written off over 10, 20 years, and then you're going to have to replace that piece of equipment. So what we focus on here is what are your additions in your equipment versus what we're writing them off at. So in this case, you increased or you've replaced $200,000 worth of equipment. We wrote off $150,000 worth of equipment. So we like to see you higher than the write-off, so the higher than the amortization. We figure you should be above that line, because keep in mind this is all in historical costs. So some of these assets were purchased 20 years ago, and if you bought a truck 20 years ago, chances are you're going to pay a lot more today than you did 20 years ago. So we want to make sure that you're replacing or maintaining those assets at a level above what we're writing them off at. So then when you do your operating budget and you budgeted zero surplus, and we come in and we say you had a zero surplus or you had a surplus of $10,000, you look at your financial statements and they showed you had $1,150,000 surplus, and you're thinking, well, what's going on here? Why are you telling me two different numbers? So what we do is we do a reconciliation to bring what you budget for on an operating budget process to PSAB, is what we call the Public Sector Accounting Standards, and this is how we generate the financial statements. So some of the items that get adjusted based on this are amortization costs, which isn't a cash item, so you don't actually budget for it. You don't need to raise taxation to cover your amortization expense. It's a accounting number that we've developed to write off the assets, but it's not an actual cash expense. So it's not included in your operating budget, but we include it in our financial statements. Similar, the purchase of tangible capital assets. So if you're purchasing a truck, if you're purchasing a building, you need to raise the cash that you need in order to actually make that payment. So if you're buying a $20,000 truck, you have to raise revenue of $20,000 to purchase that truck. We don't show that in our financial statements. We show that you've increased your capital assets by $20,000, but it's not a direct expense. That $20,000 truck will be written off over the next 5 to 10 years as an expense. So there's a little bit of a difference in timing on when expenses are actually showing on the financial statements versus when you're budgeting for them. Another key item that's different is the long-term debt. So if you borrow money, that shows as revenue on your operating or your capital budget, and it's not an actual revenue item on the financial statement. So we remove that, as well as repaying that loan isn't an expense on these financial statements, whereas you would budget for an expense of the loan payment on your operating budget. And then transfers to and from reserves. So this is one of the areas where you can help balance your budget. You either transfer money into the reserves or you transfer money out depending on the various projects that you have. Those transfers in and out show up on your budgets, and they don't show up on these financial statements. So those are removed from all these transactions. So then how do we get from our $1 million surplus down to what we'd walk in and tell you that you have a zero surplus for the year? So we remove all those items that we just talked about. So we show, okay, we take out the reserve transfers to and from reserves. We add back the expense that you had for purchasing your assets, and remove the effects of long-term debt. And so at the end of the day, your actual budgetary surplus, it comes down to zero. So those are the type of adjustments that we make. Although unfortunately those aren't shown on your regular financial statements, we usually bury those in the notes in one of the 20 pages of notes that we show. But it is normally there, and we do highlight that as we do our presentation to you, so that you're able to actually link the two together. So then we go, okay, well, we give you all this financial statements, and what do you need to know, or what should you be asking? Basically, if there's any issues, do we see any issues? Do we see any budgetary issues, long-range issues that kind of pop up out of these numbers? They could be varied as such as you're borrowing too much. You're going to have an issue with cash flow because you're not borrowing enough. Your reserves are too low. You need to build up your reserves, or your reserves are maybe in a great position, so maybe you need to plan on how to spend those reserves. There's all different types of questions that can pop out of those. And then, are there any working capital issues? So the township needs a certain level of what we call working capital, which is cash in the bank, basically, in order to operate. For timing purposes, before you collect all your receivables, you may be paying your payables before you're collecting some of those receivables. So is that level of working capital sufficient? Should it be higher? Should it be lower? Stuff like that. So, and then are there any red flags? So there are occasions where there's red flags that pop out of these financial statements that say, well, you really need to focus on this area or that area. It gives you an idea of where your receivables were last year to where they are now. Are your receivables always increasing? Are your payables increasing? Are your payables too high? Your receivables too high? That kind of stuff. So there's a bunch of different factors that are there that you want to take a look and see. Okay, we don't expect large fluctuations from year to year. The municipality is generally in a stable position, so large swings one way or another in any of these areas that we report on could be a red flag. There could be a valid reason for them, but it may be worthwhile to have a discussion on those as well. So. Now I'll turn it over to Jamie, and he's going to give you a brief understanding of which documents that you should focus on as well as part of these financial statements, or in addition to these financial statements, to help you get a true picture of where you need to go.
Thanks, Ian. So one of the key documents that you should always follow up on, and it's also follow up internally throughout the year, is your actual financial results compared to your budgeted financial plan. Some of those numbers are presented on the financial statements, but usually your administration should be preparing variance reports to you throughout the year. As a minimum, we like to see quarterly reports. So these variance reports, they're almost a report card on administration's management of finances, and it's a form of internal control. The quarter reports of actual results to budget should be prepared by administration for council. Going through these various reports, it gives council administration an opportunity for spending adjustments during the year if necessary. A perfect example would be winter control. If you're quite over in the first half of the year, then you will likely have to make adjustments in the second half of the year. And it provides status of ongoing capital projects. Are we going to be short or over by the end of the year? And if you are going to be over, how are you going to finance the difference? If you're going to be savings, how are you going to allocate those savings? Does it go into reserves, go back into your operating budget, or carry forward for next year? These variance reports can be presented by department, just like Ian presented by general government or transportation or environmental. It can be presented by spending objective, salaries and benefits, materials, financial expenses. The variance reports should be presented for operating and capital budgets, year-to-date results. And as Ian mentioned, the financial statements do not present the variance reports for items like long-term debt or transfers between reserves and reserve funds. To get those variances, you will require the internal financial information for that, or one of the notes that's buried in the 30 pages where you go from your PSAB surplus all the way down to what you budgeted for in the year. Reserves and reserve funds, that's a very important financial tool that municipalities has. They are an allocation of surpluses to be set aside to meet a future funding requirement, and funds can be set aside by either by council, through bylaw, or through legislation. And this is out from the Municipal Act, which provides municipalities with broad powers to manage financial matters, which includes power to establish reserves and reserve funds for services under their jurisdiction where they have the authority to spend money. Now you might be saying, what's the difference between reserves and reserve funds? And there is actually a big difference between the two. Reserves is an appropriation of surplus at the discretion of council. So it's like your retained earnings. One reserve can serve multiple purposes. A working capital reserve is a perfect example of that. Reserves do not have to be segregated from the general revenues of the municipality. You do not require a separate bank account. It's just an allocation of your retained earnings or accumulated surpluses that's represented by your working capital. Reserve funds, they could be obligatory or discretionary. These funds are segregated and interest accumulates in those funds, thereby reducing the amount of future funding. A separate bank account or investment accounts are required. So if you put $1 million in the reserve fund, we expect to see $1 million sitting in a bank account that you have set aside those funds. Or they could be in the form of investments, promissory notes, or internal financing through bylaws. An obligatory reserve fund is created whenever a statute requires that funds received to be segregated from general revenues of the municipalities. These are shown as deferred revenue on the financial statements in the FIR. They're not shown as accumulated surpluses, but rather as a liability on the financial statements. Examples would be the gas tax money from federal and provincial governments and parklands. The reasons why they're shown as deferred revenue is that you have an obligation to utilize those funds for specific purposes. Gas tax funds, I've never seen it, but if you don't spend the money, you likely could have an obligation to pay those funds back. But usually you set them in the reserves, the unused portion, and you utilize them in the next few years. Discretionary reserve funds are created by council, normally through bylaw. The funds to be segregated for specific purposes, and they're shown as part of the accumulated surplus on the financial statements or the FIR. Now, the FIR is the report called the Financial Information Return that gets submitted to the ministry on an annual basis after your financial statements have been prepared and approved by council. You should have policies in place for your reserves and reserve funds. Policies should indicate the types of reserves and reserve funds that are active for your municipality. They should outline the specific use of each fund, the type of transactions and the approvals required, along with targeted balances. We tend to recommend to our audit clients for reserves that we like to see them to be in the range, your total reserves to be in the range of 25 to 50% of your total expenditures. Working capital, we like to see that about 5% of your total expenditures. Some reserves you might want to say we're going to build it up to 500,000 and that's it. Some we're going to build it up to match a potential future liability, such as future landfill closure costs. Moving on, you might have heard the term the Asset Management Plan, or AMP. This was forced to be implemented a few years ago onto municipalities by the provincial government. And what it is a long-term capital plan, and it could be up to 30 years or more in the future. It's asset life cycle costing, which you evaluate your current conditions of your assets, like your roads, bridges, fleet, and your water and sewer infrastructure. It helps determine how the municipality will fund such expenditures when an asset replacement is required. So if you're looking at a truck, you know it has a useful life of 20 years. You have 10 years in, you know you're going to have to buy it in another 10 years. You should be planning on how you're going to replace that fleet in 10 years' time and how you're going to fund that. The AMP is used in conjunction with other plans and policies, such as your strategic plan, your reserves and reserve funds, and your borrowing bylaws. So if your truck purchase you're going to make in 10 years from now, you can say, okay, we're going to use our fleet reserve to cover that, or we're going to borrow through a capital lease in 10 years' time. So that's how all these kind of ties in with each other. The asset management plan is based on the tangible capital assets from the financial statements, and it's broken down as Ian presented through land, building, bridges, roads, water and sewer infrastructure. And then from that AMP, 5 and 10-year capital plans flows out from them, and then that flows into your annual budget. One thing that we're seeing from these AMPs that you as the municipalities should be expecting less funding from federal and provincial governments for such infrastructure projects in the future. Because what they're indirectly saying is that you better plan for these infrastructure projects, what you're going to buy, because we're not going to fund you anymore or decrease their funding for those specific projects. It's up to you to plan on when you're going to replace your capital assets. New accounting standards. I'm very excited for this. For effective for 2018, there's really no big accounting standards, only items that will likely affect the notes to the financial statements, so it might expand from 30 pages to 35, but we'll see. Related party disclosures required more between your local boards and the municipality, contingent assets, contractual rights, and an increased definition of an asset likely have minimal impact on your financial statements, but more disclosure inside of them. Standards that's going to have an impact in the next 5 years. The first one's asset retirement obligations, financial instruments, and portfolio investments. The asset retirement obligations, while it might be 5 years down the road, this is probably one with the largest impact, and you likely will be hearing information from your administration, as this one will be replacing the future landfill closure and post-closure costs, and will take in potential liabilities that you as a municipality are responsible for, such as asbestos. So even if it says we don't have to disturb that till we actually do anything, the accounting board will say, well, you will likely have to deal with that at some point, so you likely have to show a liability on your financial statements. Financial instruments that's being delayed for now for the last 9 years or 8 years, and it's likely going to keep being delayed. And portfolio investments is just indicated what to be recorded at market value and not cost. That's correct. Responsibilities of the auditor, administration, and council. Administration, and sometimes these are kind of get blurred, but we're here to kind of explain the differences. Administration is actually responsible for the preparation and the fair presentation of financial statements according to PSAB based on their financial records. Administration is also responsible to implement such internal control that they determine is necessary to prepare the financial statements that are free from material misstatement, whether due to fraud or error. So I know you have your internal records. We do kind of put your financial statements together on your behalf, but really those statements are your responsibility. Our responsibility is to express an audit opinion on that. And that's what the next slide actually says, is that we provide an opinion based on our audit according to Canadian General Accepted Auditing Standards. We obtain reasonable assurance, not absolute assurance, whether the financial statements are free from material misstatement. So we don't test every transaction. We don't test everything. We do test over a certain amount, but mostly on a random and testing basis. We do assess the risk of your statements of material misstatement, whether due to fraud or error, and that's by looking at your internal controls and documenting them. We do look at your internal controls to design the appropriate audit procedures to be undertaken, but we do not express an opinion on the internal controls. We perform an audit and base our procedures to obtain the sufficient and appropriate evidence about the amounts and the disclosure in the statements based on our audit to make our audit opinion. So we do look at your internal controls. We may or may not test them. We might do a walkthrough. We might see weaknesses. We're likely to communicate those weaknesses to you, but we're not providing an opinion on the internal controls. We're providing an opinion on the financial information that's on the financial statements. Responsibilities by council. Regarding the financial statements, you should review and approve the annual financial statements as presented, receive the auditor's report, ensure administration has utilized taxation dollars as budgeted, ensure administration has implemented policies and procedures as approved by council. During the audit process, we likely, if we see red flags, will document them in a letter called the management recommendation letter. We will present our findings to council, and it's really up to council's responsibility to make sure administration has followed through on those recommendations to eliminate any red flags or follow up on them. Internal control, some of the forms that you should have or should consider should be in place is a code of conduct, code of ethics, financial policies. Tone from the top, it really starts with you as the council members to push that down through administration. You should have ongoing management review and analysis of financial information. That's where the quarterly variance reports come in that should be communicated to council. Dual signatures on checks, separate approvals on invoices, having a procurement policy, budgets and regular variance reports with explanatory information of significant differences. So if you're over, just say 500,000 on winter control, well, they should indicate that you had a bad winter and not as a mild winter, if that was the case. Good internal controls should have segregation of duties, job rotation, and mandatory vacations for staff. Other internal controls include daily and monthly reconciliation of accounts, such as your banking, taxes and accounts receivable, accounts payable. External audit of financial statements is always a good internal control. External and internal audit of internal controls is something you might want to consider to be undertaken. Fraud training for employees, managers, and administration. And formal internal and fraud risk assessments undertaken by administration to increase your internal controls and to increase segregation of duties. Some of the financial policies the administration should have and directed by council, and some of them are already set in place for you, such as policies set by the Ontario Municipal Act, the Planning Act, and the Drainage Act on when to invoice, what to be kept in reserves, when to put taxes of uncollected taxes into arrears. The federal and provincial gas tax agreements with AMO gives direction on how to utilize those grants. Code of Conduct and Ethics kind of directs what needs to be put in place for financial policies. Procurement policy of goods and services, tendering process should be utilized. And financial policies regarding reserves and reserve funds to coordinate those reserves and when to utilize those funds for specific purposes. Other financial policies that should be in place is regarding taxes and accounts receivable collection, the billing of user fees. You might have a borrowing bylaw for temporary and long-term purposes, bylaws or even policies for banking, payment of accounts, and the type of investments to have. Some municipalities will have policies regarding the closing of completed capital projects or to be included in a capital fund. Some municipalities have capital funds, some do not, but you might determine if when a project is closed, how to move any savings into reserves or operations, or if you're over, how you're going to fund specific capital projects, and a risk management procedures and policies to, like through your insurance broker, to ensure that everything is taken care of properly. I know one of the hot topics, it always seems to be, goes back to fraud. And I just wanted to outline how sometimes fraud occurs. And there could be for many reasons, but the four main reasons is usually due because of poor segregation of duties or limited internal controls. Mostly handling items by one person. Cash handled off-site is always a risk. Lack of management review or financial reporting. So you as council members should be able to see reports from administration on a regular basis. And sometimes individuals just override the existing internal controls because of their position in the organization. Some of the red flags or signs if someone could be committed fraud. Someone that's living beyond their means, financial difficulties, usually close association with vendors or customers, control issues or unwillingness to share duties, or refusal to take vacations is always a big sign, because there must be a reason why they don't want to leave work. I love work, but I love my vacation down south even more. So, sometimes individuals who could be committed fraud could be irritability, suspiciousness, or defensiveness with their work. They may have a wheeler-dealer attitude. They might have divorce, family problems, addiction problems. You might not be able to see these issues, but just by talking with individuals, they might come up. They might have excessive pressures from within the organization or from family and peers to succeed. There is a Netflix film called All the Queen's Horses regarding a fraud that occurred in a small town, like small town USA in Dixon, Illinois, that we recommend that you watch. It's about an hour and 15 minutes. And what happened is that treasurer in this town stole $53 million over a 20-year period. So, and one of the key signs is that she had quarter horses, 400 horses and several ranches and $1 million coach. And while council over the years have left everything trusted to this one individual, no dual signatures only one person approval of all the process. So it's something to really take a watch and have some things kind of sink in. So that is our presentation for today, and thank you very much for having us.
So thank you very much to Ian and Jamie. Clear as mud, right? I'm going to watch that movie. We do have a little gift for their presentation, and I'm sure either of these gentlemen would be happy to chat afterwards with anybody who has specific questions.
Thank you, Deb. Wow, after that last example of fraud, it's kind of timely to have some discussions on human resources and labor relations. I have the privilege today to introduce two qualified speakers to talk about human resources and labor relations in municipalities. You know, even though I'm biased, I feel that staff is the most important asset for any organization, and municipalities, as we've heard today, are very complex organizations, providing the public with a diverse range of services. Therefore, we need to have an excellent and high-producing staff, and for you as members of council, you need to have a very good understanding of human resources and labor relations. Today, we have two lawyers from the firm of Eamon Harden to speak. They are Sebastian Huard and Larissa Valinets-Sheevan. Hopefully I got your name correct. Sebastian has considerable experience in the public and private sectors with a keen focus on municipal and federal government. As you can see in his bio, he provides legal counsel on judicial review, labor arbitration, wrongful dismissal claims, governance issues, human rights, collective bargaining, labor disputes, WSIB claims, privacy matters, and various board proceedings. Larissa practices law in all areas of labor and employment. She has been involved in litigation preparation, human rights matters, termination matters, arbitration hearings, collective bargaining, employment contracts, and employment policy. She also has a keen interest in alternative dispute resolution. Both of their bios are within your package. I encourage you to read them. Both also are graduates of the law programs at the University of Ottawa and active members of numerous professional associations. So I'd like to invite Sebastian and Larissa up to speak.
So thank you for coming today. I'm not sure if you have the choice, but thank you in any event. So I'm with Eamon Harden. We're, as Andy was explaining, we're a labor and employment law firm. We act for employers only. And today's presentation will be on an overview of employment issues, labor relations, human rights, workers' compensation, health and safety. And of course, those are all complex areas of the law, but we just want to provide you with an overview and allow you to have an appreciation for these areas. And so whenever your CAO or clerk or treasurer comes to you with an issue relating to a human resources issue, you have at least a good understanding of what they're talking about. So we're going to be covering a number of areas today, and as you can see from the slide, managing in a non-unionized setting. So some of you may not have unions, and so just explaining to you what the legal landscape is with respect to a non-unionized area of in your organization. And it may be a hybrid as well. You may have some of your staff that are unionized and others that are non-unionized as well. Also going to talk to you about unionized workplace, collective agreement, collective bargaining, the Labor Relations Act, and so those various areas as well. And Larissa is going to be addressing human rights, the duty to accommodate, issues relating to sick leave, how to accommodate employees in the workplace, and obviously the focus of her presentation is in relation to human rights as it applies to employment, but as you know, human rights can apply in other areas as well, such as services that are provided by your organization, housing, things of that nature. Larissa will also address the issues of workplace violence and harassment, so the Occupational Health and Safety Act, how does that apply to your organization, and being mindful of your obligations and remembering that when you're dealing with health and safety, it's strict liability legislation, and she'll address that with you. And finally, I'll very briefly talk to you about some of the policies that you should have as an organization, and as well some of the posters that need to be that should appear in your workplace as well. So to begin, there are two sources that will govern the employment relationship. So number one, you've got statute, which is the legislation that will apply to organizations throughout, the Employment Standards Act being one of them, the Ontario Human Rights Code, Workplace Safety and Insurance Act, Occupational Health and Safety Act, pay equity, things of that nature. And you also have what's called the common law, which are all the decisions that are issued by the courts, the body of law that's created through decisions of whether it's tribunals, administrative tribunals, or by the courts. And when you're looking at issues of employment, for instance, it's not just limited to what the Employment Standards Act will say or what the Human Rights Act will say. You need to also consider the decisions that are issued by the courts as well. And when you're looking at the common law, for instance, and we'll get to that in a moment when we speak about termination, often we go to the Employment Standards Act, which provides for provisions dealing with termination, but you also need to consider the common law and what courts have decided in terms of what is appropriate reasonable notice, often known as the severance or package that should be offered to employees. But let's begin first with the ESA. So you've got what's called the Employment Standards Act 2000, and as you all know, there were changes that were made to the ESA by the previous provincial government, Kathleen Wynne, often known as the Bill 148, which caused a lot of, I will say, a lot of angst amongst organizations and employers. So that those amendments are still in place. We now have a new government. Mr. Ford has introduced a new bill called Bill 47, which will repeal a number of amendments that were brought forward by the Wynne government, and I'll sort of highlight a few of those changes for you in just a moment. So when you're dealing with the ESA, it's your minimum. So you can't contract out of the ESA. You couldn't come to an agreement with an employee and say, I'm going to pay you less than the minimum wage. That's contrary to the legislation and would be null and void. So when you're speaking of the ESA, it applies to all of the employment contracts, all of the employment relationship between an employer and employee. There are some exemptions in the ESA with respect to certain classes of employees that are not bound by the ESA. Lawyers being one of them. Not that you should care about lawyers, but anyway, just doctors and so like architects and so on and so forth. So there are a number of classes of workers that where certain provisions do not apply to certain groups of employees, whether partially or in totality. So and where your contract provides for a greater right or benefit. So at a minimum, you need to comply with the Employment Standards Act, but as an employer, you can offer more. You can say the ESA provides for 2 weeks and 3 weeks now after 5 years. I'm offering my employees 4 weeks of vacation. That's perfectly fine, and the Ministry of Labor will enforce those terms because you're providing a greater right or benefit. So in terms of the changes that were brought forward by the Ford government with respect to Bill 47, I'm not going to highlight all the changes, but one of the specific changes that was brought forward was with respect to emergency leave days. So with the Wynne government, and I say she, the government, made changes to legislation to grant personal emergency leave days to all workers, 10 days, including 2 of those days which were paid days. The Ford government has made changes to it. It's now going to be 8, and they're all going to be unpaid days. So that's a pretty substantial change to the legislation. And one of the concerns was a lot of workers were taking those 2 days when that legislation was enacted. There's also some changes that are going to be brought forward with respect to equal pay for equal work. So the Wynne government did not want a full-time employee being paid less than a casual employee. So those changes will be repealed by the Ford government in the coming weeks. Minimum wage will stay at 14, but there's no longer the escalation at $15 per hour. And finally, one of the other changes, which I think is important, is all the on-call provisions. So that is to say, if you're on call, there was an expectation that employees would be paid 3 hours regardless if they were reporting to work or not. That change has since been, well, I say will be repealed in the coming weeks. So some other provisions, just going to go back to the previous slide. So you'll see from the slide various provisions that are addressed under the Employment Standards Act, whether it's hours of work, overtime, minimum wage, vacation, so it's 2 weeks, and after 5 years of service, it goes to 3. Public holiday, there are 9 public holidays under the legislation. Notice of termination and termination pay and severance pay. So I'm just going to zero in on that just for a moment. So under the ESA, an employer can terminate an employee on a without cause basis. So you don't need to have cause to terminate an employee in Ontario. So provided that you give that person their package, that's the end of the story. There are nuances in the legislation, but as it relates to terminating an employee, it's 1 week per year of service to a maximum of 8, so that's called a termination pay or notice of termination. And if your payroll is more than $2.5 million and you've been with the employer for more than 5 years, you're also entitled to what's called severance pay, 1 week per year of service to a maximum of 26. So at a minimum under the ESA, you're entitled to 34 weeks, so 8 plus the 26 for a total of 34, which is roughly like 8 months. So that's the minimum. And if you have a contract, an employment agreement that says in very clear terms that's all you get on termination, then a court will be bound by that, and that's your requirement under the law. If you don't have an employment contract, that's when you get into what's called a common law, and where an employee can get more than the Employment Standards Act. Generally, a rule of thumb being 3 to 4 weeks per year of service to a maximum of 24. So just thus the necessity to have an agreement with your employees to limit the financial liability for you as employers. There's also a last bullet point that I want to address, which is job protected leave. So the best example is maternity leave. So employee goes off on mat leave, and when the employee comes back, you terminate that person. So under the legislation, the employee can file a complaint with the Ministry of Labor and ask to be reinstated. That's why they call it job protective leave. So your personal emergency leave days would be a job protected leave, parental leave, and there are a number of examples under the ESA. So you can terminate an employee without cause, or you can terminate an employee for cause. So the last example that was given by the accountants, I'll call them the accountants, so, or your auditors, that Netflix movie, Treasurer defrauds the municipality for $53 million. So that's obviously a for cause termination. So, so the standard under the ESA is willful misconduct, which is a higher threshold than what you see under the common law. So you got willfully means you're doing it on purpose. You intentionally want to disobey or engage in fraudulent conduct or ignore purposely the employer's direction, whether it's a policy or something that's very specific. And to get to cause, it's not easy, and I'll talk to you in just a moment about what you need to do as employers to get to cause. But if you have just cause, you assert that you have cause at termination, then the employee can of course challenge that and say, I don't believe that you as my employer had just cause to terminate me. And if you lose on that, then you're required to pay that employee termination pay at a minimum what's provided for under the ESA, and you may be also required to pay what's called common law notice, which is the more generous notice that I just described a few moments ago. But you can, in Ontario, terminate for cause, and as a result, if you're able to uphold that, then as an employer, you're not required to pay anything. So, but not an easy case to make out. So, and then the without cause termination, which I just addressed a few moments ago. So next. Oh yeah. So when we're looking at a termination for cause, it's a higher threshold. So going back to that Netflix movie again, so in that case, I believe it was a treasurer, right? So, so there are certain positions within an organization where the expectation is higher, and they're often called fiduciaries, because of the nature of their position. So the CAO, the clerks, the treasurer, because of the nature of their position, the position of trust that they hold, courts will be less sympathetic, sorry for all those CAOs out there, less sympathetic to those individuals that hold a position of trust, because as members of council, you trust the advice that you're getting, and you're there to provide oversight, but on a daily basis at the operations level, they're there to provide you with the advice, and you need to trust these individuals. So courts expect a lot more of their senior management than they would of someone who's working in public works and at a lower level. And so, so that's one thing that's important to remember. But termination for cause, it's a high threshold. It's not easy for employers to uphold cause, but it's not impossible if they properly document their file, and there's a graduated sort of process that's in place with, a letter of warning, another letter of warning, and advising the employee of the employer's expectations. So when they ultimately get their letter of termination, they say, "You're fired." The employee says, "Oh yeah, of course, it's obvious," because there was that progression in your approach. So there's no sort of hard and fast rule in terms of what is a just cause situation. You look at the case law, you look at the facts. I know lawyers love to say that there's no sort of black and white. There's always a bit of a gray zone, but it's the context, it's the employee's conduct, and how the employer conducts its investigation, the fairness of the process. You always want to be perceived as the employer as being the bigger person in the room, the person who gave that employee the opportunity to improve or to conduct himself in an appropriate way, and you conducted a fair and appropriate investigation. And you'll see in one of the last bullets, process is important. You're telling a story to the judge, you're telling a story to the tribunal. You want to be seen as the bigger person in the room. You want to come to court with clean hands, and so process is key, documentation is key if you want to uphold termination for cause. So with respect to the termination on a without cause basis, going back to what I was describing, so you've got the minimum standards, which is the ESA, termination pay and severance pay, and that's just the minimum. But let's say for purposes of our discussion, your contract says nothing, so the employee at a minimum is entitled to its ESA entitlement, but they also can claim common law notice, which is more generous than the ESA. And there are certain factors that are taken into account by courts to determine what is the appropriate notice period. And typically a rule of thumb, again, it's not a perfect rule, but 3 to 4 weeks per year of service. But courts will look at a host of factors. So the position that you hold. So if you are a CAO, typically it will take you more time to find comparable work at a comparable salary. So look at the position, the length of service. Are you a short service employee or are you a long service employee? So of course, if you're a long service employee, notice will be greater. Your age, are you 42, which is my age, or are you 65? And so they will look at those factors in assessing the reasonable notice period. And one of the most important factors is the availability of comparable work. So if you're a nurse and you get terminated, there's a lot of work available for you, so you'll be able to land on your feet quickly versus other types of positions where it's harder for an individual to find comparable work. So those are factors that are assessed by court to determine the reasonable notice period. And of course, what's important in this process is, has the employee made efforts to mitigate their damages, so find comparable work at a comparable salary. So you are terminated, you still must make efforts to find other work. Another factor which is important is what's called inducement. So I'm working for the City of Ottawa, and Andy Brown says, "Sebastian, I want you to come and work for me, and I've got a secure employment with the City of Ottawa. I've been there for 20 years, and he makes all these representations to me. He says, you'll have a wonderful career. You're the next in line to be the CAO. Trust me." I come to work for the county, and a year later he terminates me. The county may be on the hook for my years of service with the City of Ottawa in determining my package, so my notice, because I was induced to leave secure employment to work for the county. So it's critical in even as politicians, when you're having conversations with prospective employees, the types of representations that you make to them, the promises that you make to those individuals, because those are factors that could be weighed and considered by a court. So just to keep that in mind. So the next slide is constructive dismissal. So in a nutshell, what it means is you're altering the fundamental terms of my terms and conditions of employment. Easy example, I'm making $100,000 a year, and new counsel comes in and you say, Sebastian, now you're going to make $70,000 a year. So because you've made that decision as an employer, then as an employee now, I have a decision to make. I either can accept that change, or I can sue my employer and ask for my package. Notice, severance, and common law notice that I've just described, because you've, in essence, effectively terminated me because you've reduced my terms and conditions of employment. So in a nutshell, that's what's constructive dismissal. So it's either something that's financial. It can also be a combination of factors. I was a CAO, I'm being demoted to a clerk position, and my salary is being reduced, or I'm changing my duties and responsibilities. A host of factors that can come into play to trigger a constructive dismissal. The other thing as well that's important to remember, it can also be something like workplace harassment. So if the employer creates an environment that's so toxic that the employee has no other choice but to leave, a court may conclude that you've effectively terminated that person. So there are different ways that you get there, but in a nutshell, that's what's constructive dismissal. So if you wish to make changes to an employee's terms and conditions of employment, you can provide that person with notice. So I'm a 12-year employee, I'm making $100,000 a year, and you say, Sebastian, we want to reduce your salary to $70,000 a year. You can say, in 12 months from now, your salary is going to go from 100 to 70. You can either accept that change, and if you don't, your employment is effectively terminated 12 months from now. So you've given that person notice, and that's perfectly acceptable in the law. And if the person elects not to accept that, then they may have issues if they elect to pursue a claim before the courts. But there are ways to mitigate the risk of a constructive dismissal claim. So what happens in the context of a wrongful dismissal claim? So what can the employee claim? So loss of salary, benefits, if they're entitled to bonus. The other important piece to it as well is pension, the OMERS pension plan. They can also claim what's called Wallace damages. So Wallace damages is a Supreme Court of Canada decision if you treat your employee badly at the time of termination. And I'll give you an example. Employee is terminated, and you issue a press release, and you say, we've now parted ways with Sebastian, and we're delighted that he's gone. He was a terrible employee, and just like Trump treated that reporter the other day with a CNN reporter, you're not good at your job, and you issue a press release, and you say all sorts of disparaging things about me. Well, not only can I claim my package, my severance package, but I can also claim Wallace damages, additional damages, because of the manner that you treated me at the time of termination. It's to repair my reputation in essence, okay? And it's also, part of it as well is to send a message to the employer community. You can't treat employees in that fashion. So you can also claim mental distress. So employees is terminated while they're on sick leave, for instance. And that causes damages that are provable medically, and it prolongs the person's absence from the marketplace because of the employer's conduct. And punitive damages are quite rare, but again, it's a way for courts to send a message because an employer has acted in a vindictive way. For example, an employer who would trump up, not to use Trump again, but anyway, so he's been on my mind for a while now. Anyway, but trumped up charges about an employee's conduct. You say the treasurer stole from us, and you're convinced of that, and you tell everybody in the municipality that the treasurer has stolen from you, and that person's reputation has been sullied. And after a proper investigation, you conclude that that's not the case, but you still maintain those charges down the road, and Those are examples where a court would want to punish an employer for having conducting themselves badly. And there's also the tort of intentional infliction of mental suffering. We won't get into that, but that's another area where an employee can pursue additional damages. So every employment relationship is governed by a contract. It can either be in writing, but it can also be a verbal agreement. So it can be as simple as, Sebastian, I'm hiring you, I'm going to pay you $100,000, and I respond to Andy, I say, agreed, I accept this employment with you. That's a contract. And I did a case for a large municipality 2 years ago, which was roughly about those set of facts. So be very careful what you say to staff about a contract. So it's always better to put things in writing, an email, and ideally, of course, a contract, and things are done in a proper way. So what does it mean to have a contract? You need an offer. You need acceptance. So I accept the contract. But the other piece to it is you need consideration, something in return. So, and that's what will form the basis of a contract. Something in return will be the salary, benefits, and so on and so forth. One thing that often arises, employers will say, I'm going to have all my staff now sign employment agreements. And everybody signs contracts, but there's no consideration. There's nothing that's given in return. And these individuals have been working for you for years. So, and you have built in a very restrictive termination clause, and at the time of termination, you want to rely on that clause. A court will say that provision is unenforceable because at the time that you got those employees to sign those contracts, there was no consideration. So you need to give something in return, whether it's a salary increase, a signing bonus of sort, whether in the context of a promotion. So key to have consideration, and also the important to offer the employees an opportunity to seek legal advice. You know, sign this contract right away. Give that person 3 to 4 days to review it. Email the contract well before they commence employment with you, so they're able to review it and make a clear decision about committing to the organization. And key as well to ensure that employees don't commence their employment with the organization before they've executed a contract with you. So the other area as well to be mindful of is confidentiality. So you're dealing with employees, whether it's personal information, whether it's medical information, whether it's information with respect to an investigation that the employer has conducted. Confidentiality is essential. And when I speak to issues of the necessity of maintaining confidentiality, in particular as it relates to investigations, you may be privy to information through your CAO, through an in-camera meeting, about the necessity to keep that information confidential. It remains an investigation, and you don't know what the outcome of that investigation is going to be. And it could be that at the end of the day, the person is found not to have acted in an inappropriate way. So it's critical when you're dealing with employee issues to maintain confidentiality and to avoid possible issues down the road. But things that are confidential is things that occur in the workplace with respect to performance issues. Obviously, employees going off on sick leave, medical leave, any information that you have it's important to preserve that information as being confidential and recognize the sensitivity of that information. One thing as well I want to add, sort of off topic on the issue of confidentiality as well, is written communications as well internally. So emails that are exchanged, whether it's text messages or messages that you may post in some other form, those communications are discoverable. So what that means is if there's litigation and you wrote in an email to your CAO, I think Sebastian is a terrible person, and I decide to sue the organization, I'm entitled to get copies of any and all communications between employees and the counselors and the mayors as well about what was discussed about my employment file. So it's critical to be very careful about what you say in writing. So if it's not something that you're prepared to live with, don't say it. At a minimum, don't write it down. So that's my advice to you. So I know there was a speaker this morning that talked extensively on MFIPA, but that's another statute that governs municipal governments, there are certain exemptions that exist in the legislation with respect to disclosure of information. And one of them is anything that's related to solicitor-client privilege, anything that's discussed with respect to a labor relations matter. For instance, you're having an in-camera meeting with your CAO about collective bargaining and the strategy that the employer is going to adopt through the collective bargaining process. That's information that's, I'll just call it privilege, and would not be disclosed. But there are very limited exceptions in terms of what cannot be disclosed, and I know there was a extensive discussion with the previous speaker on that, so I'm just going to gloss over that for now. So the next area is for those of you that have unions, the starting point is what's called the Labor Relations Act. So I talked to you about the Employment Standards Act. So when you're unionized, that's another piece of legislation which works together with the Employment Standards Act. So the Labor Relations Act, in essence, governs the certification process of unions. So how does a union become a union? How do employees get unionized? So through a certification campaign, they sign cards. If they've got 40% of approval amongst all the employees, then they can file an application. There's a vote that's held. No issues like in Florida right now, but anyway, there are ballots that are, and if there's 50% plus one of the employees who say we want a union, then you're certified, and you must then negotiate a collective agreement. The Labor Relations Act also addresses the issue of how do you part ways with a union. So if a group of employees decides they don't want to be represented anymore, then there's a process that's provided for in the legislation. The other piece as well, which I'll talk about in just a moment, it's what's called an unfair labor practice complaint. So it's when an employer engages in conduct that is against the union, and what's the process that's provided for in the legislation with respect to that. So, and we'll talk about that in just a moment. So what's a collective agreement? So in the context of a non-unionized employee, they may sign an employment contract. That's the bargain between the employer and the employee. But when it's a unionized setting, you sign what's called a collective agreement, which will spell out the terms and conditions of employment that applies to all employees of the bargaining unit. And the collective agreement will set out the terms, will set out the wages, the benefits, seniority rights, bumping rights, discipline, whether you need union representation at the time of discipline, and so on and so forth. The collective agreement must contain certain key provisions, and you can see that from the slide. There's an arbitration clause, so if there's an issue between the parties, then the parties go to arbitration versus going before the Superior Court of Ontario. So it's a third party, a neutral, that is selected by the parties or by the Ministry of Labor, who will decide on interpretation issues. It can be a termination issue, and so on and so forth. Collective agreements have to be a minimum of 1 year, but most agreements, I will say, is a minimum of 2 or 3, depending on the party's intentions. So, and as you can see from the slide, you can't, through a collective agreement, contract out of the ESA. So that's why when I was explaining the relationship between the Labor Relations Act and the ESA, they work in tandem. So you must have an agreement that is compliant with the ESA. So trade unions, I mean, I'm not going to spend a lot of time on that, but it's an association, a group that represents employees, and they, you've got CUPE, you've got OPSU, you've got the steel workers, you've got ONA, anyway, I can give you a long list, Unifor, and so on and so forth. So, and how they survive is they get union dues, and those union dues are mandatory. So an employee couldn't say, for whatever reason, I don't want to pay union dues. There's what's called the RAND formula. You're required to pay those dues. There are some exceptions for religious reasons, and you must give the money to a charitable organization, but that's how they work. They get their revenue through dues that are collected by employees, and that's what a union does. They act on behalf of the employees, so the person you're speaking to is no longer the employee, but it's the bargaining agent to negotiate terms and conditions of employment. So you can't negotiate terms with an employee without getting the union involved. I mean, in a nutshell. So the collective bargaining process, so whether you have, you've recently been certified or you're in the process of renewing an existing collective agreement, there's a process that exists. So the union will, either the union or the employer will provide what's called notice to bargain. We want to commence bargaining with you, employer. The Labor Relations Act says you must commence bargaining within 15 days of receiving that notice. Generally, employers and unions don't abide by that. There's, I'm sure you've seen in the media, bargaining often takes quite a bit of time, but that's what the legislation says. Once you've commenced bargaining, you're subject to what's called a statutory freeze. So the conditions that existed at the time that notice was given remain in place while the parties are engaged in collective bargaining. So you can't change terms and conditions because you're bound by a statutory freeze. You're required to negotiate in good faith, so make reasonable efforts to come to an agreement. Doesn't mean that you can't engage in sort of hard bargaining, but you have to make reasonable efforts to reach an agreement. If the parties are unable to come to an agreement, then they may call upon a conciliator, which is a public official from the Ministry of Labor that will come and assist the parties in reaching an agreement. That conciliator can't impose anything on the parties. He's there to facilitate the process and provide an evaluation of his assessment of where the parties stand in terms of their positions. There can also be a process what's called mediation, which is in essence what I've described. It's just that a no-board report has been issued. And once that no-board report has been issued, which is a report issued by the conciliator, then that triggers the clock for what's called a lockout or strike. So 16 days after that notice has been issued, has been received, either party can go on strike in the case of the employees, or the employer can lock them out. And when you're locking out employees, you can hire, in Ontario, replacement workers. If the parties are able to come to an agreement, then there will be what's called a ratification vote. So the deal that's been negotiated by the parties will be presented to the employees for ratification. And if they accept that, then you have an agreement. And often through collective bargaining, the employer will say, I also need to take this agreement in principle to my council for approval. But generally, as you know, the employer will seek a mandate from council before commencing bargaining. So strike or lockout, I think I've described that already, but it's employees can strike for a day. They can be on strike for years. An employer can put its employees in lockout for a day, and that can go on for months and months and years. And because there's a strike, employees are entitled to engage in different activities to slow down production and do all sorts of things. And that's when employers will go to court to get injunctions to control the number of picketers because it's taking 20 minutes or 25 minutes to get through the picket line and things like that. So there are exceptions with respect to strikes and lockouts. There are certain pieces of legislation which prevent employees from going on strike and from having employers lock out their employees. And there's HILDA, which is in the healthcare sector. So for those of you that have a long-term care home, employees can't strike. If the parties can't agree with the employer or vice versa, then you go before a board and it's arbitrated. It's called interest arbitration, and the interest arbitration board will decide on the outstanding issues that are between the parties. And the same thing goes for in the firefighter world and police as well. Just with respect to fire, it assumes you're, of course, unionized, so you can either be your firefighters can be professional firefighters or volunteer firefighters, and if they're unionized, they go before an interest arbitration board to determine outstanding issues. So an unfair labor practice complaint is a complaint that's filed with the Ontario Labor Relations Board, and it's to complain about the employer's conduct. You can also file a complaint against the union for improper conduct as well. And the easiest example is you're made aware that there's a certification campaign that's going on to certify a group of employees, and you find out who's the ringleader. You know, it's Sebastian is trying to bring a union here, and magically I get fired. And before the union is certified, then the union would be entitled to file what's called an unfair labor practice complaint, and saying the reason you fired me was because I engage in union activity, and the Ontario Labor Relations Board would reinstate me with those set of facts, with lost wages and things of that nature. So that's an example of an unfair labor practice complaint. Or, for instance, you're in the course of, you've got a collective agreement that's in place, it hasn't expired, the conciliator hasn't issued their no board, and you say, you know what, I don't want these employees anymore, and I'm just going to lock them out. And then you would get an application to the Ontario Labor Relations Board for an unlawful lockout. So those are examples of an unfair labor practice complaint. And you can see from the slide the remedies that are available to the board in those circumstances. So next slide. So going back to our discussion a few moments ago about how do you get to just cause, or how do you manage employees? So what you see on the slide is the progression, right? So verbal warning, written warning, suspension, ultimately termination. And you can often skip those steps. So an instance of fraud or theft in the workplace, you can go to termination immediately. But normally there must be a process. It must be a graduated process before you ultimately get to termination. And that same process would apply whether you're unionized or a non-unionized employee. So it's critical to follow these steps if you're on the path of parting ways with one of your employees. And courts will consider a host of factors. If you are terminating for cause, the seriousness of the conduct, how did the person conduct themselves through the investigation? Were they apologetic? Did they deny the offense? Do they have a past disciplinary record? And they'll consider all those factors in weighing and determining whether termination ought to be upheld. And there are, as you can see from the slide, certain things that you need to consider before making a decision. Does the employee know the rules? Are those rules communicated? Was the employee provided with advance notice of the consequences of not complying with your direction? Can you prove the violation? So you must have direct evidence that the employee engaged in inappropriate conduct. Was your investigation fair? Do you have significant proof? Have you treated other employees in a consistent manner when dealing with a similar issue? Is the discipline appropriate? So you may say you have cause to discipline, but the second stage of the process was termination the appropriate penalty in the circumstances? How quickly did you act upon when you were made aware of the employee's misconduct? So did you sit on it for 6 months, or did you act immediately? And are there mitigating or aggravating factors? So there may be personal circumstances of the employee. The employee apologized. They said, I'm very sorry. They send you a letter of apology and things of that nature. So those are mitigating factors that will be considered whether by a court or by an arbitrator in the context of a discipline hearing, whether for termination or for some other discipline that may be imposed against an employee. So when you are unionized, you will have what's called a grievance process, and how a complaint is initiated is they file a grievance, which is a complaint which starts the process, and the collective agreement will provide various steps. So typically it's 3 steps. So it initially goes to the supervisor, then the manager, and ultimately goes to the CAO. And if the parties can't come to an agreement, then the matter goes before an arbitrator, and that arbitrator will make a determination, just like a judge, whether there's been a breach of the collective agreement, whether it's on an issue of interpretation. You know, you haven't paid me my vacation pay, you've discriminated against me, you've failed to accommodate me, or it could be something related to discipline. So, and the decision that's issued by the arbitrator is binding on the parties. And if you disagree with that decision, you must ask for what's called a judicial review, which is hard to, it's very hard to overturn decisions from arbitrators unless you're able to prove that the decision is completely nonsensical. So it's a very high threshold. So I talked to you about interest arbitration, and you'll see from the slide various pieces of legislation which will determine the adjudication process with respect to deciding on outstanding issues that can't be resolved by the parties through freely negotiated bargaining. And there's the Hospital and Labor Dispute Arbitration Act, so obviously hospitals, but also the long-term care sector. So a number of you have municipal homes. In the context of the fire service, so the FPPA, the Police Services Act, so those are statutes which will determine how outstanding issues get decided when the parties are unable to come to an agreement. So, and you will see in the healthcare sector and also in the fire sector, most of the times parties end up in arbitration, in particular in the fire sector. So, nothing against firefighters, but that's a fact. It's not fake news. So, so pros and cons about interest arbitration. It allows for continuity of operations, so there's no strikes or lockouts. It allows services to be provided to the ratepayers, and ensures, through, in theory, it maintains sort of equitable conditions for the employees. One of the biggest cons of going through interest arbitration is what you often see is a sort of what I like to call splitting of the differences. So the arbitrators will sort of give one thing to the other side and one thing to the employer, and often the real issues are not being decided upon by the interest arbitrator, and there's also the risk of escalation of costs, and there are areas, certain sectors where you're seeing that quite a bit because of the lack of sort of the bargaining power that you would see through in other sectors where they don't have the option of going to interest arbitration. One thing I will point out is that in some, like for instance the City of Ottawa, for instance, for their CUPE group, Public Works and OC Transpo, they go to interest arbitration. They've chosen to go to interest arbitration even though they're not required to by the legislation. It's to ensure the continuity of services to avoid disruption to the ratepayers. So just not something I would recommend, but there are some municipalities that do that for a host of reasons. So. And when you go to interest arbitration, arbitrators will consider a host of factors, the employer's ability to pay. So that sounds nice, but typically arbitrators will ignore that. They'll say all you need to do is increase your taxes. So don't come out of here saying Sebastian told us ability to pay, so we're good. So we'll just argue that all the time and we'll be scot-free. So so typically what arbitrators will look for is comparators, and are you bringing forward a proposal that has merit, and ideally it's something that is found in other collective agreements, so you're able to turn and look to another comparator, another municipality that's negotiated something similar, and it's always about the comparability, and those are the principal sort of factors that arbitrators will look to in making their awards. They'll look to different factors like total compensation, replication, and things like that. But those are the factors that are weighed and assessed by arbitrators in issuing their decisions. So that concludes the first portion of my presentation, and Larissa will talk to you guys about human rights and health and safety.
So as Sebastian mentioned, the Ontario Human Rights Code applies broadly, so not only in employment, but also in housing and services. But for the purposes of this presentation, I'll focus on employment. And so the Human Rights Code has as its main intention to prevent discrimination and harassment based on certain grounds. So you'll see the grounds listed there essentially. What it's aimed at is characteristics of a person that are not changeable. And so it's intended to ensure that individuals aren't negatively impacted by, for example, a disability in the workplace or their family status. So, for example, having to care for their children. In terms of the workplace, it's important to know that discrimination applies also before an individual starts employment. So this can apply in the hiring process. So it's important to ensure that potential employees are aware of the accommodations available in terms of interviews or any sort of pre-employment testing. Of course, in specific questions that you might ask, qualifications, and then, of course, once you're in the workplace, things such as rate of pay, benefits, shift work, performance evaluations. All of these are places where we're looking to ensure that individuals with code grounds are not discriminated against or negatively impacted. So I'll talk about harassment more broadly in the context of the Occupational Health and Safety Act, but under the Ontario Human Rights Code, harassment has the same definition essentially, which is a course of vexatious comment or conduct that is known or ought reasonably to be known to be unwelcome. The distinction under the Human Rights Code, though, is that it's based on a prohibited ground. So while under the Occupational Health and Safety Act, harassment can be for any reason, under the Human Rights Code, it's based on a prohibited ground. So for example, sexual orientation, record of offenses, family status, disability. And there are specific provisions in the Human Rights Code for sexual harassment. So that has a lot of protection both under the Human Rights Code and the Occupational Health and Safety Act. So essentially in the workplace, once we've kind of established that an individual has a code ground, for example, disability or the status of having to care for perhaps a child or an elderly parent, then we're looking at the duty to accommodate. So we know that there's potentially a negative impact on an individual, and the duty to accommodate is aimed at enabling that person to succeed in the workplace and also to mitigate the potentially negative effects of the code ground. And employers' obligations in terms of accommodation are quite high. So the standard is undue hardship, which you'll see some of the factors there. So safety, health, financial costs, the size of the operations, things that are inconvenient, things that might cause some morale problems, generally not enough to prove undue hardship. So it's really a matter of looking at the particular employee, their needs, their limits or restrictions, and then what changes can be made in the workplace to accommodate them, to assist them to succeed. One thing to keep in mind as well is it's not a one-sided obligation. So where you have a union, it's the obligation of the employee, the union, and the employer together to look at reasonable accommodation. And so an employee does have to cooperate. So an employee has to provide you as the employer with the information that you require to figure out how to accommodate them in the workplace. So it really is meant to be a collaborative and cooperative process. Oh, sorry, return one. Yeah. And so, again, I mentioned, this accommodation can occur at any stage. So one thing we generally suggest is that in your job postings and in your hiring process, there's a statement that indicates that accommodation will be provided for individuals who may need that. So that might look like more time if there's a test to be taken, or alternative formats, or physical accessibility, so how to get into the building to come do the testing, all of those sorts of things. And before I move on from human rights, I'll mention the duty to accommodate isn't only triggered where an employee comes forward and says, hey, I have a disability, I require X, Y, and Z. There's also an obligation on employers to inquire. So that's called under the code, the duty to inquire, essentially where you have a suspicion or it appears that an individual might be subject to a disability, or they might be having other issues that are causing them not to succeed in the workplace. As employers, we can't ignore that and then say, well, we didn't know that they needed accommodation. It's really important to ensure that you're inquiring and making sure that if an employee appears to need some accommodation, you're taking steps to ensure that you know what exactly is required for them. So I'll move on to managing and preventing workplace violence and harassment. So the kind of overarching scheme here is the Occupational Health and Safety Act of Ontario. And so, as you're probably aware, employers have obligations to take all reasonable precautions to protect the health and safety of employees. So this is really broad. It includes, for example, you could think about your equipment, your personal protective equipment, those sorts of things. But what I'll focus on is harassment and violence, because these are sort of key when you're dealing with individuals. So there's specific steps that are required to both prevent and manage workplace violence and harassment. And kind of the starting point is to make sure that you have policies in place, so a workplace harassment policy, a workplace violence policy, as well as programs to implement those policies, and then that employees are provided with training. So essentially, I mentioned under the Human Rights Code, there's harassment based on a prohibited ground. Here, under the Occupational Health and Safety Act, it really captures all sorts of violence and harassment. And it's in the workplace. And you'll see the workplace on the next slide here has a really broad definition. So it doesn't just include the employee's office, it includes, for example, the locker room, the cafeteria, work-related social events, if someone's traveling for work, if you're doing conferences or training, off-site meetings, essentially any place that work is being done and there's kind of interactions with other workers. So this can include by computer, email, telephone, anywhere that, that work is being performed. And so because of the broad definition of workplace, it also means that we're not just concerned about inter-employee harassment and violence. We're also aimed at preventing all of our employees from harassment or violence at the hands of, for example, clients, strangers, customers that might come in, anyone that they may interact with in the course of their work. So you'll see the definitions here of workplace harassment under the Occupational Health and Safety Act. So harassment is engaging in a course of vexatious comment or conduct that is known or ought reasonably to be known to be unwelcome. So that piece about being known or ought to have been known, essentially it means that intention is irrelevant. So whether you intend to harass someone doesn't matter as much as the effect on the person. So even if you don't intend to cause harassment, the effect on the person can still amount to harassment. Workplace sexual harassment, similar definition, but of course it's based on sex, sexual orientation, gender identity, or gender expression. And again, that same known or ought reasonably to be known to be unwelcome. So what is the effect of the behavior? And then in relation to workplace violence, we're talking about the actual exercise of physical force, an attempt to exercise physical force, or a statement or behavior that is reasonably interpreted as a threat to exercise physical force. So again, violence has quite a broad definition as well. So kind of breaking down the elements of harassment, engaging in a course. So generally harassment will be a number of incidents taken together. But of course, one single serious incident is often enough to amount to harassment. And the less serious the conduct, the more likely that it's repeated. Whereas on the other hand, the more serious the conduct, it need be less persistent to amount to harassment. Vexatious, hostile, abusive, humiliating, unwanted. And then conduct, of course, can be words, actions, gestures, anything that's intended to upset or be unwelcome or vexatious to a person. And we've talked about whether when it's known or ought to be known, so it's about the impact, not the intent. And unwelcome is a lack of consent. So essentially, this is how we break down whether something amounts to harassment or not. And some examples of harassment, essentially anything that we would consider sort of bullying that would amount to harassment. So it can be physical, verbal, nonverbal. It could be visual, so it could be inappropriate posters or photos being passed around. As I mentioned, it can be based on a prohibited ground, so it could be racially motivated, sexually motivated, and ensure that you're aware. It could also be electronic. So as Sebastian mentioned, things that are flowing back and forth between emails, those sorts of communications are also important to be careful of. And then in the context of sexual harassment, there's a piece about the power imbalance. So it's not only just sexually inappropriate behavior, but also where there's, especially in situations where there's the power to confer a benefit or authority. So you'll see the examples there. One thing as employers to remember is that harassment is not intended to cover normal workplace management. So, it's okay to give direction to employees and to performance manage employees, coaching, feedback, disciplinary action if it's justified, assigning more work, assigning an employee to work overtime. All of these are not workplace harassment. Including even differences of opinion. It's okay to disagree in the workplace as long as it doesn't, rise to the level of being vexatious and harassing. So on workplace violence, I gave the definition there of either a threat of physical contact or an attempt to do so or actual contact. So some examples of violence, verbally threatening to attack or leaving threatening notes, threatening emails, hitting, bringing a weapon to work, throwing an object, sexual violence, all of these kinds of behaviors can amount to workplace violence. And so as employers, there's significant obligations under the Occupational Health and Safety Act to protect employees from workplace harassment and violence. So first, policies I mentioned, you must have both a workplace violence and a workplace harassment policy, and they need to be reviewed as often as necessary, but at least once a year. Generally, if an incident occurs, that's a good time also to review the policy, which may be more than annually, and it has to be posted or available to employees in a conspicuous place. The second aspect in relation to violence specifically, employers are obligated to undertake a risk assessment. And so to look at the workplace and assess what kinds of risks of violence may arise. So for example, robbery or the kinds of violent threats that may be between employees or from exterior sources as well. And the findings of the risk assessment have to be shared with the Health and Safety Committee. And so it really is, again, a conversation and a discussion to assess the risks and then come up with a plan to mitigate those risks in the workplace. So in addition to having policies relating to violence and harassment, employers are also required to have programs. So essentially your program will implement your policy. So your policy is a statement of your intention to prevent violence and harassment, and then your program is sort of the nitty-gritty on how you intend to do that. So in the context of violence, we're looking at how to control the risks of violence that you identified in your assessment, how employees are expected to summon immediate assistance when workplace violence occurs or when it is likely to occur. You need to have a reporting structure in place, a reporting mechanism, and then an investigation mechanism from the employer's perspective. So once you either receive a report or a complaint of workplace violence, how is that handled internally? In the context of workplace harassment, again, you need some of those same elements. So how do workers report? Often your harassment and violence programs will have a report form attached to them, sort of an intake form where an employee can indicate what has happened, who's involved, who are the potential witnesses, and then the employer will take that form and initiate their investigation to deal with those kind of complaints. And again, because we're dealing not only with harassment or violence that may be perpetrated by employees, there's obligations to, for example, if you get a report that a client or a contractor is committing harassment or violence in the workplace, employers also have an obligation to take reasonable steps to interview or investigate with those individuals and take steps to prevent the violence and harassment, even if it's not done by an employee. And again, your programs have to be reviewed annually. So the consequences, of course, disciplinary action can result if there's a finding that an individual has engaged in workplace violence or harassment. But it's also important that employees are aware that no reprisal is permitted. So if an employee complains that they're being harassed by their manager or their supervisor, the manager or supervisor can't take any negative disciplinary action against that individual for making a complaint, so long as the complaint was made in good faith. On the other hand, where an individual knowingly makes a false accusation, that can result in discipline. And so in terms of sort of the steps of discipline Sebastian was talking about and what kind of behavior might result in immediate dismissal for just cause, anyone who violates your policies or programs, and those who knowingly or maliciously make a false accusation under the policy or program. And so it's important in your policy and program to ensure that there's a strong statement that reprisals and retaliatory measures won't be taken, so that employees have a sort of safe environment in which they can make complaints to ensure that if violence and harassment are occurring, they're stopped. So kind of carrying off of the violence, there are obligations on employers in relation to domestic violence, where the employer is aware or should have been aware that domestic violence might occur in the workplace. So for example, if an individual is in an abusive relationship where there's the potential that that individual's abusive partner may come to the workplace and perpetrate violence in the workplace, either against that individual or others, then reasonable precautions have to be taken. So it's important as employers to educate employees about domestic violence, including the signs, and to recognize situations where a person might be at risk. And again, this is where you'd go back to your program and your procedure for making a report and then investigating the report. And there are some signs to look for in a victim. So in terms of your program, this is the kind of training that you'd be giving to employees to ensure that they're aware of the risks of domestic violence and what to look for and how to report that to ensure that the individual affected is safe in the workplace as well as the other workers in the workplace. And the last sort of piece in terms of workplace violence is where where an employer is aware of a person with a history of violent behavior. There are actually obligations to give personal information, which could include the name, identifying information, to a worker where that employee is expected to encounter that person and the risk is likely to expose them to physical injury. So ensuring that even if the person with a history of violent behavior isn't an employee, if it's someone that your employees may interact with, knowing that employees know how to deal with that and have the information necessary to protect themselves. And again, it's sort of a need-to-know basis, so it's only allowable to disclose as much information as is necessary to protect the employee. So some factors to be considered on this front: was the history of violence associated with the workplace or work? Was it associated with a particular worker, or was it workers in general? So this could look like an angry customer, potentially a disgruntled former employee. It may arise in the case of domestic violence. So all of these are kind of issues that should be flagged in your assessment of the risks of workplace violence. And in the context of the Occupational Health and Safety Act broadly, employees have the right to refuse work where they have reason to believe that they may be subject to injury. And these have been extended to workplace violence. So where an employee has reason to believe that workplace violence is likely to endanger them, they may refuse work. But this is not true in the case of workplace harassment. So essentially it's aimed at physical risk. And so there are exceptions, though, to employees where the danger is an inherent or normal part of their job, or the refusal would endanger the life, health, or safety of another person. So sort of pertinent to municipalities, there's exceptions for members of the police, firefighters, as well in long-term care homes, hospitals, nursing homes. And so for other employees, though, there is this right to refuse work where there's a fear or a risk of being subjected to workplace violence specifically. And so I'll hand it back to Sebastian to wrap up with policies.
So just picking up on Larissa's points about the Health and Safety Act, it's strict liability legislation, so I just want to explain that quickly. If something happens in your workplace, whether someone falls off a ladder or there's an incident in the workplace, then what happens is the Ministry of Labor will come in, investigate that, and the employer's only defense at that point is what's called due diligence. So demonstrating that the employer did everything in the circumstances to prevent the workplace accident. So whether it's through training, ensuring employees have appropriate safety equipment. So that's pretty easy to understand. And if there's a finding that you haven't complied with your due diligence under the legislation, there are fines or penalties that are provided for in the legislation, which are quite substantial. So, but one thing to keep in mind is that also applies in the context of if there's violence in the workplace. And I'm sure you're all familiar with the Pierre Lebrun matter that occurred in Ottawa with the OC Transpo. And so I just want to give you that context so you can appreciate how harassment can ultimately lead to violence in the workplace and how that may trigger potential fines under the Occupational Health and Safety Act. So Pierre Lebrun, he stuttered, worked in a municipal garage for the city of Ottawa, was being taunted and harassed by his colleagues, and that occurred over a lengthy period of time, and ultimately the worker came in and shot 4 of his colleagues. So pretty gruesome facts, but what's important for you as employers is that if you're aware of workplace harassment and the employer doesn't do anything about it, in essence ignores the problem, and that problem ultimately becomes something significant like the OC Transpo example that I've just described to you, then that could give rise to significant liability for employers. So just offering that up as an example, a fairly current example, why it's important to address issues of workplace harassment, because you want to sort of nip it in the bud before it becomes a much bigger problem. And liability flows not only to the corporation, but it can also flow to the supervisors who enabled and allowed this type of conduct to occur in the workplace. So just wanted to give you that context. When I say strict liability, that's what it means. The MOL, the Ministry of Labor, comes in, does their investigation, proves that there's been an accident in the workplace, then the burden shifts to the employer to establish that they did everything in the circumstances to prevent the workplace incident. So based on the example that I've just given you, employers made aware of harassment, hires a third party to do an investigation. Those employees who are engaging in inappropriate behavior with that employee are all disciplined, or some of them are terminated. The employer offers training, has policies in place. Those are examples of due diligence and making reasonable efforts to prevent workplace violence in the workplace. So just wanted to offer that up to sort of close the loop on that. So I'm a little off topic, but anyway, just wanted to. So a few things just to be mindful of is in the workplace, there are things that need to be posted in the workplace, and you can see that from the slide. Examples like the Employment Standards Act poster. That's why you see the 1, 2, 3, 4 in your workplaces. Those are posters that are required to be, that need to appear in the workplace. So I think the slide is sort of self-explanatory. So the last slide is the next slide and the last slide, a few policies that you need to have in the workplace. So certainly with the recent changes by the Trudeau government, updating your drug and alcohol policies, very important as well for those workers that work in sort of safety-sensitive positions, and have provisions in there addressing the consumption of drugs and alcohol at work. So, and as you've seen probably in the media, a lot of employers are taking a zero tolerance approach and saying you cannot report to work under the influence and things of that nature, which obviously is good policy. As Larissa explained, you must have a workplace violence and harassment policy. You must also ensure that one of your employees has a emergency first aid certificate, and that's a requirement under the Workplace Safety and Insurance Act, so also known as the WSIB, which is an insurance scheme. AODA, which is the accessibility policy, so you need to have an accessibility policy in your workplace that applies not only to your employees, but also individuals that are using your services, ratepayers or other individuals that will access your workplace or your facilities. And also, your policies must provide that you accommodate employees in the workplace and have statements to that effect, whether your existing employees or through the hiring processes that you have in place with your respective municipalities. And you must also advise employees that you are mindful of your obligations under AODA, the Ontario Human Rights Code, as it relates to accommodating employees or individuals that have disabilities, and those disabilities is what Larissa described, disabilities flowing from the provisions of the Ontario Human Rights Code. So those are, that's the end of our presentation. Thank you very much for attending, and And congratulations to all of you for your election and a successful election. And if you have any questions afterward, please answer your questions. Thank you.